Hello, and welcome to the Argyle Financial Controller Leadership Forum. My name is Brittany Sullivan with Argyle, and it's great to have everyone joining us today. I have some important information to share with you, and then we will turn the floor over to our esteemed opening keynote speaker. First, we would like to take a moment to thank today's sponsors. Our partners are committed to providing you with valuable content and a great overall experience. At any time during today's event, you can visit their virtual booths from the main agenda page, which includes complimentary materials, information, and meet and greet opportunities. We also welcome you to stay socially connected during today's event. For those of you who are active tweeters, please use the hashtag ArgyleDigital and follow us on Twitter at ArgyleExecForum. Also be sure to follow Argyle on LinkedIn for special announcements. I would also like to take a moment to touch on our content neutrality policy, which we have curated based on the feedback we have received over the years from our members. We have worked closely with our speaking faculty to ensure that you receive a set of balanced and neutral viewpoints during the session today, and we truly appreciate our members' support of this policy. Finally, and most importantly, we would love to hear from you. So during each session, we encourage you to submit your questions and comments in the Q&A box on your screen. Following each presentation, we have set aside time for our speakers to weigh in on your questions. Thank you again for joining us. Now let's get started. Without further ado, I would like to introduce our speaker, Ashok Manthana, AI strategist and author for AI in Finance. We are excited to have Ashok with us for his opening keynote titled Evolving Technology, Embracing a New Future of Finance. Welcome, Ashok, and over to you.
Hi, everyone. Happy to be here. I'm Ashok Manthana. I'm an AI strategist, and I've been working in finance for 12 years now. And let's get started. I'm happy to be here to talk about the financial controllers, their pain points, and the evolving technology that is helping them solve these problems. Let's get started. So let's discuss about the current role of a controller. There is regulatory part. This is the operations part where we have accounting oversight, reconciliations, controls, reporting, report generation, and the storytelling part of it. So the regulatory part is actually taking considerable time for a controller these days, even in the world of ERPs and SaaS-based systems. And then there is operational efficiency part. So this is a continuous improvement that every company right now is implementing. Even for controllers, they have to look into their financial operations, see how much time is it taking? What's the duration of our close, right? How can we improve it? Can we run this with lean teams? These are the questions that are being asked every day to the controller. So the operational efficiency is also a part of controller's job these days. And then there is strategy. Increasingly, controllers are being involved in the strategy, and also there's a strategy part of their job where they talk about the new insights that come from the finance data and also the future directions. And in addition, there is M&A, like mergers and acquisitions that could happen that will also, there's a lot of strategy work in there, how to assimilate this new acquired company into the existing one. And all this needs strategy work. And increasingly, controllers have been spending a lot of time on strategy. Being change champions has been a role that has been evolving over years. But controllers, as we started implementing more and more systems, ERPs, there's a lot of work, a lot of change that comes into the financial operations. And controllers have to be these change champions in terms of bringing alignment across the teams. It could be controller groups, FP&A, IT teams, leadership, bringing that alignment and executing the strategy to implement these new systems or processes, which also takes considerable time of controllers. Right now, in each company has their own share of these tasks, but in terms of ideal case, it should be equally distributed. What it means is that 25% of the controller time should be spent on regulatory, 25% on operational efficiency, same as with strategy and change championship. So I want to quickly show you the finance value model. This has been there for a while, but this also shows how evident where we are spending our time in finance, where we are spending our resources. For example, we have been spending a lot of money, resources, and time on the bottom of the pyramid of transactions, record keeping, our general ledgers, our subledgers. We still have been spending a lot of time. Maybe you might disagree with me in terms of maybe you're not spending that much time. You are not spending, maybe the IT is spending on that, right? If you take the overall resources, overall budgets that we are spending on your record keeping and transactions, it is still considerably high than other finance functions. So there is a lot of value that has been added in the last few years in automating this, implementing ERP, SaaS systems, but we still have been spending a lot of time here at the bottom of the pyramid. On top of the pyramid, reporting and compliance, yes, we are spending some time, but not much. But the most value being added is on the top of the pyramid with reporting, with financial planning, and strategic finance. We are still, across companies, across industries, we are still not spending enough time, enough resources, as well as enough focus from leadership in streamlining the operations of the top of the pyramid. And this is where a lot of the value can be added to the company by investing real resources. It doesn't mean we are taking things from the bottom of the pyramid, but it is more of, can we automate some of the transaction stuff? Can we automate some of the reconciliation stuff so that we can free up our time and take those resources and spend it more on the top of this pyramid, which adds much more value to the finance function and to the overall company. So let's switch gears and talk about what are the pain points that the controllers these days have been seeing in their process. Manual processes, we still have a lot of manual processes in our systems. And I'm talking about small companies, mid-sized companies to large companies. There's still a lot of manual processes in finance function, in controller group that we have been doing. It could be loading data, report generation, reconciling data, sending reports to relevant people during every month end, quarter end, year end. And this always has been a manual process. And how do we tackle this? And controllers and their teams have been spending considerable time in these manual processes. And it's not just the time and risk, and we'll see how it is also impacting other aspects of our finance function, like hiring with all these manual processes. The second one where teams are spending considerable time is reconciliation. Again, don't think reconciliation is just between a subledger and a general ledger, right? Now, in a mid-sized to a large company, we have a lot of systems. If you think about it, we have subledgers, we have general ledger, we have consolidation systems, we have BI systems, and we also have data lakes. So who's reconciling all this data to make sure the data is the same? So there are teams that are spending their time reconciling this data between various systems where we are spending a lot of time. And this is a big pain point, this is a repetitive task, and we're doing every month after month. And this is a bigger pain point that we have to address in the next few months or years. Managing systems has become a bigger pain point for controllers. As I mentioned, there are multiple systems now. When you're a smaller company, you only have one general ledger. Probably you do all your consolidation, everything in there. But as your company grows, you have these multiple systems. Each system has its own specialization: general ledger, subledger, consolidation system, BI for analytics, right? And reconciliation, and also, what if there's an update to one of the systems? Now, since we are all moving to SaaS systems, if there is a new patch update that comes to these systems, how do we manage it? How do we manage our patching process between our month-end processes? And how can we test our processes, make sure everything is running okay with these patches coming in? So managing systems has becoming much more complex process involving multiple teams, and maintaining this has becoming a big pain point for controllers. And we have seen overworked and stressed teams has been a common theme across controller teams, particularly in the finance function. It's also because our teams have become much more leaner over the years, and particularly in the last 2 years, teams have become much more leaner because of COVID, because of remote work, and now that increased workload. And our deadlines has always been there because we have month-end close, we have quarter end, we have external reporting to do. So this is also causing a lot of burnout in the finance teams. And how do we address it is another question that we are going to talk about. This, and again, this also leads to some of the hiring problem. So hiring in controller groups has been a persistent problem in the last few years. There's low morale. There's also a lot of burnout, a lot of manual process, right? And recently we have been talking to a lot of CFOs where CFOs are talking about this new generation of accounting and finance resources. They don't want to really work in an environment where they have a lot of manual process and it is repetitive, right? They want to work on new insights. They want to work on things that adds a lot of value and they have a say in it. So if now this all comes to our manual processes, right? How do we, when we have a lot of manual process, repetitive work over again and again, how do we automate these things so that, again, it reduces the workload, manages all our deadlines, it reduces the burnout, and also increases the morale of the team. So now the finance team need not be the number crunching, checking the numbers, but more like insight generation, improving the processes. So these are few of the pain points that a lot of controllers have been facing these days. So one of the questions that came in at this point of time is, what do you recommend for gathering business requirements for some of the vendor solutions? I have a slide. We'll talk about it in the next few minutes. What are the current trends in right now in controller and also in general in finance function? One is auto reconciliation. This is very important, and I don't think our finance teams or the IT teams, related IT teams, are giving enough importance to auto reconciliation. But there are tools available in the market, and also you can automate it using RPA in various ways. Is if we can reconcile systems automatic, and if there is less oversight needed for this process every month or every week or every day, it can free up a lot of time from our finance teams. So auto reconciliation is a trend that we have to look into and see how we can automate some of our processes. Robotic automation, you might have heard RPA. We can automate any of these processes: data loads, report generation, report reconciliation, sending reports to someone. We can automate all these processes. But as someone mentioned, all these trends needs to be driven by finance teams. But if you're thinking, in a lot of companies, robotic automation is driven by IT. Of course, finance is involved. Finance gives you requirements, but there should be an easy way for finance teams to automate their process without much external help. Or even AI, right? If finance teams can run their own AI without like bunch of data scientists and machine learning engineers and software engineers and IT. So that will actually empower finance teams to improve their process much more faster, much more significant way than involving a lot of teams. So robotic automation is another way where we can eliminate a lot of manual process. And a lot of companies have done significant work in automating their processes and eliminating manual tasks. Visual scorecards. Visual scorecards are nothing but dashboards and visual reporting that we do. If you think about it, if you as a controller, you want to make a point, you don't want to send like 10 reports just saying the same point, right? And also having an evidence for it. If you can build a visual scorecard, a dashboard where you can say, okay, for example, for a flux analysis, if you can build a flux analysis using a visual scorecard or a dashboard, that actually sends the point much more straight and easy to send the data. So visual scorecards can help in better storytelling. And this also falls into various other aspects of self-service reporting. So finance owns the data, right? Like if you think about all the finance data and some of the operational data, what if finance teams can run their own reports without IT intervention? Right now they can do it, but what if there is a modification needed? There is again governance, and then there is, of course, governance is good, but I'm saying there's a lot of intervention needed from various finance teams, various IT teams as well, in terms of generating these reports. So self-service reporting is a concept where if finance can easily modify their report or easily come up with, let's say, a CFO asks a question of what is the operating margin of a specific division, they don't have to go to an IT team. They don't have to go to a specific team or a data analytics team to get that report. But if they can generate by that, it becomes much more easy and efficient for finance teams to do it. And these are all interconnected teams, visual scorecard, self-service reporting, and also financial data lakes. And we hear a lot of finance data lakes these days. Every company wants to build a data lake where you can host all the finance data. When I say all the finance data, we're talking about our journals, our actuals, our journals, our balances, our consolidated, translated data, our forecast data, and also we can go into granular data like invoices. If we can get all these data into one place, and if we can generate insights over it, it is a game changing for a company in terms of analytics. So this is where companies are moving towards building this single source of all finance info. So it helps in data analytics, easy reporting, and also for AI in the future where you have one source for all this data, which is reconciled and clean. Now moving to AI. I'm sure you have heard a lot of AI talk these days. AI particularly is helping in forecasting, audit, and modeling. There are tools like Tada.ai, which are basically helping finance teams run it. So, but this is a theme I want to see across finance functions is finance teams basically running all these tools rather than you having a subsidiary IT team or a data science team running it for you. So, again, for AI is really helping in forecasting. If you have historical data, AI can check all the patterns in the historical data and also add your future drivers, right? For example, if you want to increase marketing by 20%, how will that impact your revenue in the future? This is a question that you want to ask, and AI can give you that answer in much more data-driven way, in much more scientific way than doing it manually in Excel. So there are a few limitations for AI. For example, historical data. You need to have good, clean historical data before you do it. Moving on to, I quickly want to talk about how AI helps finance. There are two aspects to AI helping finance. One is the analytics part, which generates insights, forecasts, and there is also automation part of it, where it helps in automating our processes. In analytics, we have financial modeling. We do a lot of pricing, we do budgeting, valuation models. We use Excel or we use some BI tool where we build static formulas to build our modeling. And this is where AI can really help. It can take all the data, find the patterns, and can also take human inputs into it and help us get this pricing and budgeting valuation decisions in much more scientific way than just building an Excel and using our static formulas. As we know, the market dynamics are in the company structure, company business models change every few years, but we still keep using the same Excel, same formulas in our sales modeling, in our planning and budgeting. Also forecasting, our monthly, quarterly, yearly forecasting, doing it much more data-driven way, driver-based way can really help. AI can really help using it. And again, there are products in the market, a lot of products in the market that are coming up, products like Tada.ai, which really helps in finance running it without having like a big data science team or a machine learning team doing that forecasting part of it. Automation is a big part where anomaly detection is a really good use case where, particularly for controller groups, where you can use for fraud prevention, for audit compliance. I want to give you an example. Let's say if you want AI to detect any anomalies in your general ledger. Let's say you have like 10 million records per month in your general ledger, in all your journal entries. How can a person go in and find out where, if all the controls have been followed, if it is audit compliant? And it's almost impossible for a human to do it. Still, we do it in various ways. But if AI can go through it, AI can easily find what are the anomalies. It can go through your historical data and also the historical anomalies. And now that helps AI to find the future anomalies. Even if you think about it, even if it can detect 80% of the errors, that actually reduces your time in terms of looking for these low-hanging fruits. But you can slowly improve the process and get to a much better accuracy in the future. Again, in recommendations has been a big use case as well. AI can help you in recommendations in AR collections, payments, etc. For example, if you have a bunch of AR collections, if AI can go through it and let you know, it can prioritize it, which needs more attention, so that a person can go follow up these specific accounts more than the other. This way you can prioritize it, and which are much more, it tells you which are much more risky than the other accounts. This way it increases the efficiency of the team, particularly in the time crunch of the month and quarter ends. All these finance functions, audit, FP&A, controller, AR, AP, has been using AI in improving their accuracy. I've seen a lot of AI being used in particularly FP&A, controller groups, AR, and AP. And audit and treasury is also coming up using AI. I quickly want to go through the future of finance. And these are the technologies that are already there in the market, but we still haven't found good use cases for them in finance yet. That doesn't mean we are not going to. It might happen in the next few years. Like AI, last few years, AI, we thought, okay, where will we use AI in finance? But now companies in very creative ways have been using AI, particularly in finance teams, starting from controller, FP&A, and also in our financial operations. So in-memory computing, this has been there for a while, almost from 7-8 years, where we are talking about in-memory computing. Right now, we have multiple systems. We are loading data on a month end from one system to another, doing these specific operations. What if we have everything in one place, in one memory? Think about doing our consolidation or translations within seconds of time, not minutes, not hours, but within seconds of time, how it will change our close process. Right now, it takes 5 days, basically, in a lot of streamlined operations to close books from subledgers, ledgers to your consolidation systems. But what if we can do it in matter of minutes? So this is where it really helps finance in speeding up our operations. And what if you can do reconciliation in matters of seconds, right? We don't have to spend a lot of time doing this. This will also make our finance teams much more efficient and leaner by having faster systems. Voice interfaces is another trend where we are talking about voice querying data using voice commands, right? For example, executive asking, can you show me a P&L of a specific product or a specific division? Of course, we can do a pre-built report, but voice interfaces, voice querying is about, it can take your voice, convert it into a command and into a query, and it can query the data and show you the data of the report. So the technology is already there, but there are very few companies that have implemented. But this will also change how we are interacting with our executives and leadership at this point of time. Think about executives, if they can query data just by themselves without like a finance team's intervention, this will be a game changer. Blockchain is another. We have been hearing about a lot of things about blockchain. Of course, we are in little crypto's winter right now, but blockchain can actually change how we do financial operations. There are a few companies that are providing blockchain general ledger, but there is no big use case at this point of time, and it's also considerably slow for general ledger operations. But we don't know. This might change in the next few months or years, and we can find a really good use case and start using blockchain on it. AI everywhere is just a phenomena where we are talking about AI doing all our tasks. There's still a few years where we can reach this point, few years or maybe decades to reach there, where AI can do a lot of our tasks, right? Right now, we know how to use AI to do our forecasting. That's it, right? But we're still not using AI for a lot of our other operations. So this is where if these AI multiple use cases at some point will all combine into one general AI, where it will do all our finance operations in an automated way. And again, I want to stress on the point, the technology of all these things is already there, but the biggest obstacle at this point of time is we still haven't found big use cases where we can use this. I want to talk about how we can get started with technology, particularly for controllers, right? So using a new technology gives you a competitive advantage within your company and also for your company in the industry. For example, you using a SaaS-based ERP, a SaaS-based tool, or AI, particularly that gives you an advantage. There's always a learning curve for a new technology, particularly for the emerging technology. So start slow. Again, if I want to talk about AI, you want to use AI in audit, or if you want to use AI in forecasting, take a small use case, right? Not very a big one, like explore it. It will help you in exploring this new technology. There's always a learning curve before the technology is totally mature. Like let's say ERP, now ERP technology is very much mature and you have good resources that are available, you can hire directly. But evolving technologies are not like that. There's a steep learning curve. So start small, explore the technology, whether it's a SaaS-based technology, SaaS-based ERP, BI tools, or AI, and then prepare the workforce, right? Train the team. And if I want to take an example of data science AI, every finance team should learn how data science works. They need not be expert. They need not be a data science expert in doing it, but at least they should know how it is working and what are the limitations of a data science or a machine learning or an AI. And every person in the team and also the leadership should go through this training of data science or this new emerging technology. Once you have it, you set targets, right? You can't just explore the technology and say, okay, it's good, let's implement it. Set meaningful targets, identify what is important, efficiency, effectiveness versus growth, and then capture the quick wins. This is the framework that I've seen companies using and being successful. Start small, explore the technology, set meaningful targets, and capture quick wins in the finance teams. Thank you. Connect with me on LinkedIn. And if you want to talk about emerging technologies on Controller Group or on FP&A or Treasury, and also if you want to talk about AI, feel free to connect with me and we can always talk. I'll take a few quick questions. We have 3 minutes. Do you see AI, ML, RPA as part of finance and accounting teams? Yes. AI, ML, RPA, they should be run by finance and accounting teams. Right now, that is not the model that we have been following, but it should be. Finance teams should take that lead, talk to vendors, understand the limitations of it. Of course, you can involve your IT teams in doing it, but take that first step and ask for it to your IT team that you want to explore AI in this specific process. And that's how you can get started in it. And as a controller of organization, how can you convince C-level executives? This is both top-down and bottom-up approach. Again, as I mentioned, talk to various vendors, build a business, build a use case. What I've seen particularly with AI is I've seen a lot of finance teams, controllers, FP&A leadership, talking to vendors, working with them on a small proof of concept to build a use case, basically, right? You build a use case and you show the wins to a leadership, and you also show the limitations of AI, right? You don't want to give them a false hope that this is going to do 100% of automation for you, but showing that the small POC, showing the quick wins, and also the limitations of it. It's a good way to convince leadership to do a considerable investment in the next few years to have that competitive edge over the other companies. What are some good targets of KPI? I think number one is always the ROI we look at, right? If we can increase the efficiency of the team, that would be a good metric that we always see in financial operations, right? It's not about reducing the workforce. It's about if you can free up this workforce time, they can actually value add in some other ways. So the first KPI that I always focus on is reduce the workload of the existing workforce. That would be a good win. And that could be a good ROI that you can show for any executive. And then you can say, okay, I have moved this resource to particularly use on new insights, or as we have seen the pyramid, to the bottom, to the top of the pyramid, where it adds more value. All right, I think we are out of time. Thank you. And you can find me on LinkedIn, and happy to help and happy to answer any questions.
Wonderful. Thank you so much, Ashok, for such an insightful keynote. I also want to thank everyone who joined us today for this session. This session, along with all of today's content, will be made available on demand following the event. Thank you again, Ashok.
Thank you.